Hey, everybody, it's Pete Carmasino here at Chaikin Analytics. Thanks for joining me on this week's halftime show here on StockCharts TV. We really appreciate the opportunity to bring this to you weekly. And, it's been a couple of weeks since we got a new video out, so we apologize for that. I had some technical difficulties, but they're sort of fixed. I got a bit of a different setup today, so I'm working through it. Anyway, thanks again. We're going to go over, obviously, the hot part of the market right now, which is energy. We're going to look at the XLE ETF today and just kind of break down some of the top names in there that we have rated as bullish, obviously. And then we're going to look at some ones that are showing signs of buy signals that we have that are proprietary to our system, but you can compare it on the ACP and kind of look at some of the general technical levels or indicators on the ACP platform as well, to kind of give yourself an idea of what we're looking at versus what you can do on the ACP platform. And obviously, you need the plugin to do that. Again, it's a very inexpensive plugin. It's going to give you all of the ratings on the individual names that are U.S. equity-based names. You don't rate every name. If it's an IPO, it takes about a year or so for us to get a rating. We need a full year of data. But we do build technicals within a few months, sometimes 4 to 6 months. You'll start to see a technical setup that is very useful when it comes to relative strength, our own proprietary way we view it. But again, on the ACP platform, you'll have the rating when it becomes available, and obviously all the indicators. So if you're talking about names that have been trading for a while, we're going to have the indicator on it and the power gauge rating that you can use on that platform. So let's dive into the charts. Let's see what we see on XLE here today, and see if we can find some interesting setups in our own alerts. All right, folks, we're back here on the ACP platform. As you can see, I've got the chart of probably the first name you think of when you think of energy, which is Exxon, symbol XOM, Exxon Mobil, I should say. And obviously, the stock has been, on a tear under the current circumstances of what's going on. So we're very bullish on the name. So if I go back and look at Exxon here, again, very bullish is going to be sitting at the top of our list. And really, we've been back and forth with the name. It was in a range-bound setup. We knew oil was obviously moving higher during this entire time, but it takes a while for this to react, and obviously folks saw this as an undervalued situation, and our rating and our relative strength turned right around the $60 to $65 level. Now, about a year ago or so, in June of last year, we were calling this out as an interesting setup because it was starting to look very, very good, but it was more of the XLE. If I go back to the XLE and look at the entire chart of the XLE, we were starting to see obviously a nice push here, and it based for quite some time, almost a head and shoulders here. If you really squint, one shoulder ahead, two shoulders here, and then broke out of that neckline and then retested it, right? It's very, very interesting. Technical analysis does kind of hold true in a lot of the times. But we've got a momentum breakout here that's happening on this particular name, or on this ETF, I should say. It was oversold. Move that out of the way. It got oversold around 65. Now, this is XLE, right? XOM, which is Exxon, which is one of the top weighted names in the fund, was also oversold. So it kind of goes lockstep with XOM. So if you don't want to take single stock risk, obviously you can use the XLE and own all of these names. So look at what we have here. We've got 17 bullish names, only 2 neutral, and no bears, right? There are no bears in this at all. Obviously, everything is being increased because of the spike in oil prices, and maybe continued spike if we start banning Russian oil, which it looks like we're going to. Obviously that's going to just disrupt supply even further. So hopefully we have a solution ahead of that ban or sanction where that supply can be replaced, but we don't know that for sure. So we're going to start looking. Let's go down the list and look at COP, which is ConocoPhillips. Again, these charts are going to look very, very similar. Again, oversold. It was a good opportunity to enter there, but it never changed its rating. If you go over here and we'll type in COP on the ACP platform, ConocoPhillips, and you can see where the technicals kind of helped you out here as well. Now, I don't have all the indicators on here. I don't want to get into the fact that one indicator is better than the other, or trying to use anything to make a prediction. But you've got a long-term 200-day moving average there that really helped sort of guide you through. Now, during the course of this, right? Let's see what this was. This was July, August. If we go back to our rating and we look at July, August, we were kind of neutral on the name, right? But we went to bearish because it closed below its long-term trend. Now, you wouldn't see that if you're using ACP, but you'd know that if a neutral name was neutral for a while and then it turned bearish, or if it was neutral negative, I should say, and it turned bearish, you would know that it was a bearish name that was above its long-term trend, and that obviously changed the rating. So this actually was just a neutral name that went to bearish and then back to neutral, and then you started to see the push. And so that was right around September. If you go back here, you start to look at September, and you kind of see that move higher. There's that odd pattern that we saw. It was a range-bound pattern for a lot of names in this particular industry, and Conoco was just one of them that was following the trend along with all the oil names, and most likely because people were buying them as a basket, because it's really hard to pick one name and say it's going to be the best beneficiary of higher oil prices. You just don't know. Look at EOG. Again, this one is typically associated with natural gas, but no doubt it has a market crude oil and natural gas as well. But again, an oversold setup. But here, this particular one is a really telltale kind of a setup. So this one was neutral plus. When it broke above our long-term trend, it turned to bullish. And what happens quite frequently is you're going to see the rating get ahead of relative strength. So you can use the rating change from a lower rating to a higher rating as a nice indication of what you could expect. Again, it's obviously not a guarantee, but we see it all the time. So we see it all the time because it happens all the time. And it doesn't always work, obviously, when a rating change happens before a relative strength change. It could be sort of a fake out, breakout kind of a thing. But when the breakout occurs and it sustains itself, especially since it was holding that 200-day moving average, and that relative strength started to change right around September, October. And if you look, September, October is when it kind of migrated away, almost retested, and then moved higher. So you've got an opportunity here to kind of use the ACP platform, as a buffer, using all the indicators there as well. But when you add this, you're putting the odds in your favor. That's all we're trying to do. We never said anything other than that. It's a weight of the evidence approach. You want to try to find good names that are in good trends, that are obviously fundamentally and technically strong. You want to marry the two together. You don't want to live just by one. Now, technicals, if you're using stock charts, you're obviously into technicals. That's why we wanted to add this to create more fundamental view for you, so you can see what's happening, on underneath the hood, so to speak, of the company. Marathon Oil, a very similar setup. Now, this was a bit of a tug of war back and forth between bullish, neutral, bearish, and that was because things were changing underneath. Again, don't forget, we've got 20 factors, right? There's 4 main categories: financials, earnings, technicals, and experts, and each one of those have another 5 underneath. So that's what puts this whole rating together. We weight the factors and then obviously see where they rank and create the rating from that. So you see that a lot of this could have changed in this whole area here. And then obviously even here, there were some changes that happened underneath the hood, but corrected quickly. And then the rating changed back in January, and it was off to the races. One little pullback here, January 24th, we had that big sell-off in the markets. Remember that? And where was that happening? That was happening right around this area here, but really never broke its long-term trend on the 200-day. And obviously, you would have been tracking the particular rating itself along the way. Let's take a look at a couple more. PSX, which is Phillips 66. Again, this one's interesting. Now, it's not as predominantly bullish, I should say, from the trend standpoint. It is on the rating, but check it out. It's oversold. It's got a great dividend. Everything is really pushing to the bullish side in our rating. And it is testing that, or it tested that long-term trend while it was oversold, but relative strength and the rating stayed strong. So it's an interesting way to kind of look at this. So if I pull up PSX here, again, you can't see the history of the rating here. I understand that's why I'm showing you how you could potentially use it if you're just using the ACP platform. And so there you go. You've had that push and pull. You can see how much it kind of was almost like a mirror image above the 200-day, then below the 200-day, then a little bit more above it, then a little bit more below it, and then it finally broke out. But this is range bound, to say the least. There's no doubt about it. But on our system, this is kind of testing that long-term trend. And look, your RSI here is kind of holding that midpoint level, which is sort of a confirmation of support and really sort of the sideways to upward trend that you could be seeing in this name. Let's look at Valero. This is another refiner. And again, a very similar chart, but check this one out. It's got a relative strength buy rating on it. Now, I said I was going to look at some signals, so I only have a few minutes left. Let's look. Valero is one of 3 names that actually has some signals, and that's a relative strength buy. So if we go back to the workspace here, we pull up Valero, and we see, again, an oversold setup. It's definitely oversold here. We've got a strong relative strength, and we've got a bullish rating. And if I pull up VLO in here, you'll see how the rating correlates. Obviously, it's the exact same rating here. Very bullish. And what do we have? A bit of a pullback here. And look at RSI. Tested that midpoint range of 50 and kind of bounced. Now, we'd like to see this gets a higher high. I don't like the lower low on the RSI there, but I can't be too picky. Overall, these names look pretty strong, based on what's happening here in the markets. Let's look at the other two, since they're here. Let's look at OKE. And, not a great looking chart, really. I mean, it's range bound. It's not hurting anybody here. It's definitely a strong stock and a strong trend. But look, financials and earnings are kind of holding this one back. Not the best looking one. So if you had it here, OKE, you're going to see the same thing. You're going to see, what's going on with this name, right? It's kind of range bound here. It's not a perfect setup chart, but it's not bearish, right? From a trend standpoint, it's just range bound, right? It kind of has a move, it pulls back. It has a move, it pulls back, and it's pulling back even today when oil's hitting, close to 13-year highs. So let's look at the last one, and then we'll close it out, which is BKR, Baker Hughes. Now, this was an interesting one. It seems like it's a little late to the party, and I don't know if there was an upgrade in our system. We can look at news here. It doesn't look like anything that I can decipher right now. But if I'm looking at the chart, obviously there was an event. This is where you got to do a little bit more homework and not rely just on charts and ratings, but go find out what happened, right? Pull up some news and see what's going on with the name. And if I look up here, KR, again, wow, very, very, very prominent move higher. Again, a little overbought. Let's go look at ours. We're a little overbought. We're not quite overbought the way we kind of calculate RSI. It's very similar, but our relative strength in general versus the SPY is super strong, and it has been since January, beginning of the year. So that's kind of how you look at the names and kind of use the rating to kind of see what's going on. But XLE and energy in general have been doing great. All right, everybody. Thanks again for joining me. My name's Pete Carmasino, Chaikin Analytics. This is the halftime show. We do it every week. And I hope you enjoyed this segment on XLE, kind of looking at the top names in there and seeing how our rating and our trends and how you can use the rating on the ACP platform to kind of, again, put not only the fundamentals on your side, but you already have the technicals. When you combine the two, you're putting yourself in a position where you're using a weight of the evidence that the market uses too. So take a look. Make sure you grab the plug-in. Again, it's really inexpensive. Go on into the Chaikin area inside StockCharts.com and use it. Try it out. All right. Thanks again. We'll talk to you guys soon. Bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.